Stocks failed to hold on to gains earlier in the week. Metals and realty lead the slide, while healthcare and financials show resilience.
HDFC Bank reports below par credit growth. Yes Bank's growth also lags peers, with both also seeing declines in their low-cost deposit ratios. IndusInd Bank posts its best loan growth in 12 quarters.
Equitas Small Finance Bank gains after SBI Mutual Fund gets the RBI nod to up its stake, while strong December business boosts Angel One and an order win lifts RailTel.
Fresh fears of a slowdown following weak China data and IMF's warning hurt crude. Brent declines over 5%.
Hello and welcome to Halftime Report. I'm Ekta Batra and with me is Mangalam Malu. Well, it's turning out to be a day where reality is setting in, it seems. A lot of the volumes are back when it comes to global markets. We have a lot of cues lined up, such as the FOMC minutes this evening. And that seems to be weighing in terms of sentiment that what exactly are the central banks going to do in 2023, whether or not we can expect more aggressive rate hikes from the US Fed and for how long. That seems to be one of the key cues which is weighing on the markets, as well as possibly global recession fears. It seems as though crude has also inched up a tad bit after the fall that we saw overnight. So that bit of a balm seems to have taken back a little bit as well at this point in time. So do watch out for that. Currently, the Nifty down around 169 odd points. We have a lot of Q3 updates coming through. So a lot of stocks which continue to be in focus on account of that. Hi, Mangalam.
Hi, Ekta. You know, the last couple of days, it was getting extremely easy in terms of a trade to go ahead and buy the dip. This morning, right from the word go, we had the broader markets under pressure. We had more stocks declining than the number of stocks which were advancing. And that's played out so far as well. We're at the low point of trade this afternoon. Volatility is back in the system. The India VIX has moved to the high point of trade as well, up almost 7%, 7.5% from the lows. And you have the advanced decline lines, which are at the broadest that we've seen in terms of a gap between them from the start of today's trading session. 2,000 stocks declining for just around 700 advancing. We saw some declines come by from, late last evening as well, from around 3 to 3:30. We saw some of the advanced decline lines come closer, and now it's only worsened. Let's see where we go from here, because a lot of people do believe that maybe, 18,000 to 18,050 would act as some support, but let's see where we go.
Okay, well, yes, just about closing in on 18,000 at this point in time. Thanks, Mangalam, for that. Well, in fact, let's tell you what we have lined up on the show for you in the next 60-odd minutes. First up, Sanjay Thapar, who's the ED and CEO at SJS Enterprise, will join in to discuss how their business is currently performing.
We'll also put some focus on stocks reacting to news and their third quarter business updates.
At around 12:30 p.m., as always, we have a technical check. Today, we have Aditya Agarwal, who will be with us to tell us what his trade setup is looking like.
We'll also focus on some important brokerage commentary coming in and what they expect for 2023, specifically for the banks, the IT, the oil marketing companies later on the show.
And lastly, our commodity corner, where Manisha Gupta, commodities editor, will be speaking to ICICI Securities. All this and much more in the next 60-odd minutes.
All right, on that note, let's then welcome our first corporate on the show. SJS Enterprises is the stock on our radar, among the leading players in automotive, decorative, aesthetics industry. The stock is up nearly 33%. Year to date, but importantly, the triggers for them would be higher allocation coming in from their chrome plating business, higher allocation coming in from their non-auto business as well, and the value of kits increasing as they add new clients. We do have with us Sanjay Thapar, who's the ED and CEO of the company, joining in. Thanks a lot, Sanjay, for joining us. The first time we're speaking in this year, so wish you, your team, a very happy 2023 as well.
Happy New Year to you, Mangalam. Yeah.
Thank you. Let's talk about business. How was this third quarter for you? Because auto sales numbers is what we have. They suggest it's a bit of a mixed bag. We've been speaking to consumer durable companies as well. They've been speaking about high inventory build-up, so low sales for them in terms of primary demand. How has the quarter been for you? And are you on track to meet your 25% growth this year?
Mangalam, so auto business is seasonal. So Q3 expectedly they ramp up to the festive season. All the OEMs build inventory in their pipeline, and we had robust sales this year. So there is some amount of inventory correction that happens in the trade in the Q3. So that's nothing unusual. So this is what happens. But what we see is a very strong demand uptick. What forecast that we have at the moment is that the next quarter is going to come back with a bang. And yes, we will be close to our guidance of 25% growth that we said at the beginning of the year. Though export markets continue to underperform, there is still not visibility, but the domestic demand has more than compensated for this. So we are quite optimistic that we will be in line with what we committed at the beginning of the year.
Okay, that's interesting. Mr. Thapar, hi, welcome to the show. The export market, I just wanted you to elaborate a little bit with regards to the trends there, because you had hopes of increasing it to around 25% of sales. I think it's around 13 to 15% currently. What are the trends that you're seeing, which you can share with us going into 2023? How much do you expect it to possibly grow, and where do you think the possible headwinds will emerge from?
So last year was bad for exports because of this uncertainty in Europe. So just to give you a perspective on my company, so almost 40%, 40 to 50% of our sales come from Europe, which was impacted. But then, as I said earlier, it was more than compensated by the domestic demand that we have. So on H2, we were actually tracking quite well. So in terms of, we had almost a 26.5% growth over last year. So Q3 is a subdued quarter, fundamentally in the export markets because of Christmas and also the inventory correction in the domestic market. But the guidelines that we have from the customers are that Q4 will be bad, coming back to exports. Long-term story remains intact. So we see that SGS is a very competitive player in the global markets. We already supply to all marquee customers. We are adding more products to our portfolio. So that looks very promising.
Right. And, that brings me to my next question with regards to your revenue mix itself. Mr. Thapar, we've been speaking about your business for a while now. You have said that some of the growth prospects for you would be an increasing contribution coming in from new gen products, which is currently around 15 to 17 odd percent. Going forward from this 25 to 30% of decals, 15 to 17% of new gen products, 30 to 32% of chrome plating, how does this revenue mix change? What do you see the most amount of traction in going forward?
So we will see that four-wheelers for us would grow very strongly, and new generation products with the four-wheeler application are finding a lot of traction. As I have informed earlier, the features that increase are consumers like more advanced features in their vehicles. And this leads to a demand in better and better aesthetic products. One area is, for example, is display sizes that happen in the cars. So these are increasing rapidly. With the capability that we have, we see ourselves as being a significant player in that market, especially when regard to components of the display. So we will not make the display. So that is a big growth vector. And the percentage of sales from export or the new gen products that we look at would be close to about 20 to 25% on a much increased revenue number that you would see over the next 3 years.
Okay. Mr. Thapar, I want to come back to the broader trend of you indicating that the domestic market is going to outperform. Just give us numbers. And the larger view is that, the economy might see some headwinds going into next year simply because the export markets might not be as robust. And overall, we are in a higher interest rate environment as well. Given all of those headwinds, you still expect the domestic market to outperform? And if you could compare it to what you probably envisaged or saw in 2022, the trends that you're seeing in the domestic market.
Yeah, so coming back to the first part of your question. So exports is, as I said, about 13% of our sales. And that is not the major mover at this moment. We expect this to grow to 25%. So the long-term story seems to be intact because we've tested our competitiveness and the number of products that we keep adding to our portfolio. Coming back to the domestic market, again, as I see, we see a lot of traction for this new generation, new vehicle launches that have happened. These are very feature-rich vehicles, which is good news for companies like us, which do a lot of aesthetic parts and can help embellish those vehicles. So we see strong demand coming in from those vehicles. And the new generation products also, the offtake for them, for these new generation, for the new vehicle launches is fairly strong. So we see a very good visibility in terms of what the outlook for these new parts that we are supplying to these vehicles.
Okay, so let me put it into, in a different context. Capacity utilization of your plants currently. What are they at? What do you expect it to probably go to in 2023?
So SJS at the Bangalore facility, we have 60% capacity utilization, 60 to 65% currently. We see this good enough for the next 2 years. We are, as I said earlier, growing at 25% year on year. So we expect that we should reach about 85 to 90% capacity utilization over the next 2 to 3 years. That's in Bangalore. At Pune, the new facility that we acquired, Exotech, we grew that very strongly. So 50% growth last year. This year, again, we are looking at a very robust growth. We've already announced to the market that we are investing in expanding capacity there. We've already earmarked close to about 100 crores for that expansion. And that will happen in a staggered manner over the end of this year and next year.
Right. On Exotech itself, you had a target of doubling your revenues over the next 3 years from the current facility itself. And add to that, you have new capex coming in as well, which would give you a little over 200 crores in terms of revenues. Those numbers are what you stick by now as well, right?
Absolutely. We have very, very strong traction and we will double those sales.
All right. And final question from my end. You said that you did have a lot of clients coming in. Mahindra Scorpio N was the other one as well, which was about 2,000 rupees per unit in terms of your sales to them. What are the other models that you've, gotten admitted to or you're supplying to right now? And what are the models that are doing well?
So Mangalam, I would not like to comment specifically on specific models with specific customers, but needless to say, so we are in a pole position as far as all these new generation vehicles come, and they're all doing very well. So Mahindra has grown tremendously, Tata is growing very strongly. So we see a great revenue realization, especially Mahindra is the key customer for Exotech, and they've really done very well in the market.
So does that mean that you are also on the verge of announcing any sort of acquisition? Because the last time we spoke, you said you have earmarked about 200 to 300 crores for some acquisition. Would that be in India? Would that be some facilities overseas, etc.?
So we are in discussions. I will announce it when we conclude the negotiations. But at the moment, we are in discussions for acquisition. And of course, we are very mindful of the fact that it should be a strategic acquisition that allows me access to...
FY23 or 2023?
Yeah, it's in the pipeline. Depends on where can we close the deal.
But 2023 it happens for sure, right?
That's the target, yes.
Okay, all right, Mr. Thapar, we're going to leave it on that note. Thanks very much for joining in and speaking with us. So that's SGS Enterprises. That stock is down around 1.3% at this point in time. The company is extremely confident about the domestic growth. They expect it to surpass the export growth this time. They're not that confident about exports in the next 2 quarters odd, but they do expect it to pick up and the longer-term story to be intact, scouting for acquisitions. Maybe we could hear something in the near term. Need to take a short break, but on the other side, we'll put the focus on a whole host of stocks which are reacting to a lot of news flow. Stay tuned. Welcome back. Well, it is definitely a sluggish day for the markets, but a lot of stocks in focus on the back of news. One of them is Aurobindo, which I'm tracking. That stock is lower, but nonetheless, it is positive news because their arm, Eugia Pharma, has received a final nod from the US FDA to market and manufacture a cancer injection, which is basically the generic version of Vidaza. It is market size around $46 million. It is expected to be launched by this month important because any kind of injectable approval is definitely much more difficult to get, and the street has been watching Aurobindo's injectable business quite closely in terms of approvals as well as revenue generation. So this should be a positive. But nonetheless, stock is lower by around 0.5%. But the other one which we're tracking is Avenue Supermarts, which is in focus on the back of its Q3 business update. Mangalam, tell us more.
Well, for Q3, this is a seasonally strong quarter for all the retail companies, and DMart in that has reported its highest ever quarterly revenue. If you just take a look at the standalone revenue, it's a 25% jump year on year. A 3-year compounding of revenues for the company has happened at a pace of 18.5%, slightly lower than what it happened at in the second quarter, which was a little over 20%. But be that as it may, quarter on quarter, the revenue growth was 8.8%, again, on account of the festive season quarter. They've added 4 stores in the third quarter. This year so far, they've added around 22 stores. And point to point, if you look at it, the number of stores that have been added has been about a 16% jump out there. So 25% jump in their revenues, 16% jump in their stores means that the derived same store growth could be around 8 to 9 odd percent. That is what the derived number is. The company does not, explicitly speak about its same store sales growth. The stock might be under pressure today primarily on account of valuations. DMart has never been particularly cheap and currently is trading at around 73 times FY24 price to earnings as well. So market sentiment as well as valuations causing the stock to fall in today's trading session despite the revenues being at a historic high.
Okay, historic high there, but not so much in terms of a stock. Tata Power is the other one which is in focus after the CERC committee ruled on the share of mining profits from the Mundra PPA. Vivek is here to break this down for us. Vivek.
That's right. So some relief coming in for Tata Power. In fact, quite a bit of clarity coming in as far as Tata Power's profit sharing of coal mining profits is concerned. So the CERC committee yesterday in a ruling has gone ahead and ruled, and they have said that the company will now have to share 30% of mining profits from the Mundra PPA, as you mentioned. Now remember, Tata Power is supplying power under emergency measures under this Mundra PPA. Now this particular order pertains to the period from May to December of 2022 and does not pertain to the earlier request of Tata Power to go ahead and increase prices as far as its PPA with various states are concerned, where it supplies power from the Mundra plant. So that's an important clarification. Now, the other important thing to keep an eye out for is the company is also going to share profits through the sales at power exchanges as well. So DAM Capital has written a note on this particular development. They are saying that the sharing of mining profits earlier, which was being calculated 100% to 30%, is actually a material positive as far as the company is concerned. The company was earlier accounting as per rate set by the committee at 100% sharing of the mining profit. So this 30% is something that they are seeing as a positive. They are saying they are expecting anywhere between 500 to 800 crore of additional profit that Tata Power would now be able to recognize. Tata Power also responded to our queries. They have welcomed this particular decision and they believe it is a positive step as far as their own operations are concerned.
All right, Vivek, thanks a lot for that. Let's move on to Abhishek now. Some updates coming in from the BFSI space. HDFC Bank, Yes Bank, IndusInd Bank. Abhishek joins with a roundup of all of these. Abhishek.
Well, Mangalam, to begin with, HDFC Bank, the loan growth has disappointed over there, which is largely led by the fact that, sequentially there is a drag in the corporate loan growth. So to begin with, deposits are up 19.9% YOY and about 3.6% quarter on quarter. The CASA momentum has not kept in line with the deposit momentum, and we are seeing fund flow across banks moving away from CASA to term deposits. So CASA ratio is at 8-quarter low of 44% when compared to 45.5% in the previous quarter. The loan growth at 19.5% YOY is the weakest in last 4 quarters, and about just 1.8% quarter on quarter is perhaps the weakest in last 6 quarters. X of pool that they have the arrangement with SDFC Limited, the loan growth is at 19.5% YOY and close to 1.9% quarter on quarter. The credit to deposit ratio is at 5-quarter low of 86.9%. So you can expect some pressure on the net interest margin on a sequential basis. Coming on to Yes Bank, it's a mixed bag given the fact that deposit momentum is pretty strong, up about nearly 16% YOY and 6.8% quarter-on-quarter. The CASA ratio has held up relatively well when you compare to peers. It's just declined by 10 basis points on a sequential basis. The advances growth now, they have lost market share both YOY and quarter-on-quarter. So advances growth is at 11.7% YOY and about 2% on a sequential basis. The liquidity coverage ratio, that's improved over there nearly to about 120% when compared to 105% in the previous quarter. Coming on to IndusInd Bank, the loan growth on a YOY basis is perhaps at a 12-quarter high. So to begin with, deposit momentum, it's up 14.3% YOY and about 3% sequentially. The CASA ratio or the low-cost deposit ratio is at 7-quarter low of 42%. Calculation shows that, the CASA in absolute value has actually grown lower than the overall deposit momentum. Retail deposits, however, remain strong, growing at more than 6% quarter-on-quarter. The advances growth were at 19% YOY and about 4.5% sequentially. So the credit to deposit ratio, that's improved both YOY and quarter-on-quarter. Back to you.
Okay, all right, Abhishek. Thanks very much for that. So a couple of big financial firms coming out with their Q3 updates, HDFC Bank, IndusInd Bank and Yes Bank. Loan growth continues to be in double digits. But moving on, CESL has concluded the tender of 6,465 electric buses for 6 Indian states, and sources say that JBM Auto is likely to emerge as a big winner. Vivek is back with us to give us more details on this story. Vivek.
Well, absolutely right. So this was one particular tender that was being eagerly awaited by all of the companies that are interested in the EV space, the EV buses space. So now what's actually happened is that CESL, which is the Convergence Energy Services Limited, has actually gone ahead and concluded the tender, as you rightly said, for over 6,400 buses, and this is for 6 Indian states. Now, this is the first tender under the National Electric Bus Program, and the total value of this particular tender is quite significant. It is over 30,000 crore rupees. Now, what we understand from our sources is that JBM Auto, which was an active participant as far as this particular tender is concerned, is likely to get an order, or is the L1 or lowest bidder as far as 2,500 buses is concerned, and this would make JBM Auto the highest in terms of the number of buses that it would be getting in. So it is 6 states, Haryana, Gujarat, Telangana, Kerala and Arunachal Pradesh, where JBM Auto is likely to get these order buses from CESL. The estimated value of the contract would work out to a little over 10,000 crore rupees, so it will be a significant development as far as JBM Auto is concerned. We reached out to the management of JBM Auto, they are yet to respond to our queries.
All right, Vivek, thanks a lot for that. With that, we'll take a short break with on the note that the market is actually at the low point of trade. We'll come back and get in some trading strategies with Aditya Agarwala as promised. Welcome back. The market's closer to the low end of today's trading session. In fact, just about 20 points away from today's low, and there's pressure from all over the place. We do have Reliance, which is at the low point of trade, a big heavy weight on the index. We have ITC, which is at the low point of trade, which again is a big weight on the index. And what's also dragging the Nifty as well as the Nifty Bank is HDFC Bank. HDFC Bank came out with its third quarter update, and by virtue of its weight, it has dragged both the Nifty as well as the Nifty Bank lower. So all frontliners for the Nifty dragging the index lower. ICICI Bank is the other one that joins that list. The mid-caps have it even worse. So good time to get in what the perspective is from the F&O space. The market's meandering between, yesterday's high of 18,252 and today's low of just below 18,040 odd. So let's see whether today's low is protected or not, because we are seeing a fair sell-off. The 18,200 call sees a serious amount of writing as we speak, and as the market falls, the bears believe that that yesterday's high of 18,252 odd will face a strong congestion. So the 18,200 call comes up for you, sees a serious amount of open interest build up. What's also not helping is the kind of unwinding that we're seeing at the 18,200 put. So the 18,200 put has seen almost 45 lakh shares being unwound for a premium of 164 odd rupees, telling you that the bulls believe that the markets may go lower from here. And higher levels, the resistance is primarily on account of technical reasons as well. We have both the 50 as well as the 20-day moving average of the Nifty between 18,280 and 18,300. We're also seeing further writing in the 18,150 call and the 18,100 call. As the market falls lower, the bears keep increasing their territory on the way up. 18,100 put. Up until an hour ago, we were seeing open interest addition to that, but now as well, we're seeing some bit of unwinding out there. So those who were writing the 18,100 put, bulls believing that 18,000 to 18,050 would be a bit of a support, are unwinding some of those positions. So 18,000 to 1850 is an important crucial zone. All of this began to unravel when the Nifty Bank actually broke the 20-day moving average of 43,170. Ever since that, the Nifty Bank has actually fallen by over 100 points from these levels itself. 42,970 is where the Nifty Bank is right now. The question is whether the lower end of 18,000, 18,050 would be protected or not. We have Aditya Agarwala joining in. Aditya, do you think technically we are at an important zone?
Good afternoon, Mangalam. Absolutely, we are at a very crucial zone. In fact, the way markets have suddenly turned south this morning is a bit of a surprise after yesterday's good up move. It's a sudden down move that we are witnessing today. 18,000 to about 17,950. That happens to be the key support area for the market at the moment. Along with that, Bank Nifty to 42,900 is the immediate support zone for the Bank Nifty. If that is taken out on the downside, then bulls need to run for cover, and maybe 42,500 is something that I'm eyeing on the Bank Nifty as well. Don't lose sight of the VIX, which is climbing sharply in trade today. 15.5, 16 is something that needs to be monitored very closely. If VIX starts to trade beyond 15.5 or maybe closer to about 16, then there could be case for more volatility creeping into the market, and maybe then 17,900, 950 is what I'm talking about, could be retested. So time to be a little cautious because the way the markets have turned suddenly south in trade today cannot be ruled out completely that the correction is over. So between 18,000 to 17,950 for the day, watch out for that. That could be the immediate support zone. If that is held, maybe a bit of a short covering back to levels of 18,150, 18,200 can be seen.
Okay, all right. You're definitely cautious, Aditya, this Wednesday. But tell us, how does that play out in terms of specific stock trades?
So I've got a couple of a buy and a sell because of the way the markets have been moving around. Clearly, pharma is the space to hide into, and DV's lab is something which is looking interesting at current levels. So maybe one can go ahead and look to initiate fresh long positions in DV's lab for a target of 35.50 for with a stop loss at 33.90 on the downside. The short call is in the cap good space, which is L&T, looking a bit weak at the moment, and it has broken down from a trendline support as well. So all in all, looks like it's headed south from current levels and can see further correction. So on the downside, 1990 would be the target with a stop loss at 2100. Traders can look to go short on L&T.
Okay, Aditya, I just wanted your thoughts with regards to this entire fertilizer pack, which is buzzing. I don't know how you'd approach it technically. Many of them had a good year, so they are seeing follow-on buying as well. FECT, NFL, RCFs of the world, Madras Fertilizer. How do you approach them?
Oh, absolutely. In fact, a lot of these stocks have come out in the reckoning suddenly. All these beaten down sectors which nobody was talking about, and fertilizer definitely stands out within the pack. If I take a look at medium to maybe a bit long-term view, then I would stick to these names, especially your RCF and fact. Both the stocks look very attractive even at current levels, despite the fact that they've seen decent up move in the past few months. I believe there's more room on the upside, and the recent correction actually in these stocks do provide an opportunity to go long in both the stocks, fact and RCF. You can further see 10 to 15% upside in these stocks. But again, as I mentioned, because market's a little volatile, so your time horizon has to be a little longer, cannot be an intraday or maybe a day or two. But yes, the fertilizer space continues to look very strong on charts, and I believe there's more upside in this space.
All right. Thanks a lot, Aditya, for joining in. With that, we'll step to a short break. On the other side, we'll get you our interview with the newly appointed Chief Operating Officer of Hyundai on the company's demand outlook.
Welcome back. Well, sluggish day. We have the Nifty, which is down around 180 odd points. We have the Sensex, which is shed over 600 odd points as we speak at this point in time. A couple of stocks within the entire healthcare space are managing to buck the trend. So Divi's Lab stands out. That stock is up around 1.5%. Maybe we can also pull up Gland Pharma, where there was some positive news with regards to their medical device facility. They have indicated that the US FDA had inspected it in August, and now they've received the establishment inspection report indicating closure of the inspection. Stock is holding up in a weak market, up around 0.2%. So that's what's taking place in terms of specific stocks. But let's move on to the auto space then. Hyundai India has clocked its best ever annual sales in 2022 with more than 5.5 lakh units sold. Interestingly, this was the company's highest ever domestic sales since inception. The premium and the Creta Venue products accounted for around 47% of the CY22 sales. Parikshit Luthra caught up with Tarun Garg, who's the newly appointed Chief Operating Officer at Hyundai, and began by asking him about the new launches and what kind of growth the company is expecting this year.
2022 was a great year for us, and that was primarily because we were able to spot the customer trends, the movement towards SUVs, and as you mentioned in your opening statement that SUVs contributed 53% to our overall sales. So we had a great year. Tucson, our flagship SUV, also saw a very good response. We were selling about 1,000 Tucsons a year, and now we're looking at 5,000, 6,000. So the whole paradigm is shifting. And as far as 23 is concerned, I think there are a lot of positives going. We can clearly see that the Indian economy is much more resilient. The tax collections are high. The stock market is doing well. The general positive sentiment. There are challenges, of course. We don't know what's going to happen to this new COVID in China. Of course, the global economy is showing signs, because of the inflation. So there are challenges as well. But I think momentum is good enough, and we should hope for a good year. I know you're looking at a growth number, but what I have learned in the last 2-3 years is that let's not try to really put a number to yearly growth. Let's take it month by month, quarter by quarter, and we'll definitely end up better than what we anticipate if we try to do an annual growth forecast.
Right. Rather than going into hard numbers on production volumes, could you give us a sense of how do you see the SUV segment for Hyundai growing and overall the SUV segment in the industry growing as well?
Yeah, so you have seen that last year, as far as industry is concerned, SUVs contributed 42% to the overall industry, whereas for Hyundai, the number was 53%. We believe that there is a lot more upside still to it, and we at Hyundai probably are looking at somewhere between 55 to 60% SUVs in calendar year 23, and I believe that even industry would somewhere be between 45 and 50%. So this surge towards SUVs will continue, primarily because of customers really liking for the design, for the technology, for the fuel options, petrol, diesel, turbo. So all these things, and that the body stands, the way you can look at the road, all these things are really going for SUVs.
Right. I would also like to ask you about your launch plans for this year. You have the Ioniq, which is going to be showcased and launched at the Auto Expo. Give us a sense of the product plans, the product launch plans for this year.
Look, Hyundai has always been at the forefront of launching products. You could have seen that even in the last 3 years, which were plagued by COVID, we launched more than 10 products. So yes, Ioniq 5, we are very excited because it is the World Car of the Year, and we are very happy to launch it. You saw the iconic Gateway of India, display that we had. We are receiving some very good traction. Beyond Ioniq, of course, there will be more models. You know that I cannot talk about them. But with Hyundai, you can always expect some exciting models, new models, also some facelifts, full model changes. So I think 23 will be an exciting year. And as and when time comes, we'll keep you updated.
Okay. Could you give us a sense of the number of products, if not the exact models?
Look, I would like to keep it at that yes, please expect more from us and we'll deliver.
All right. Tell us about the Ioniq 5, sir. Compared to the Kia EV6, which is a completely imported model into India, and the price is somewhere around 70 lakhs. What will be the production format, the export format for the Ioniq 5, and what will be the possible price range?
Look, we fully understand that, of course, Ioniq 5 is a very premium product. And we understand that customers' expectations from us are not only the product should be good, but also the pricing should be such that it makes, it can make it, it is not really targeting a very, very niche segment. So we are aware of that. So please wait till 11. And we are not looking at a CBU option. We are looking at, some localization as well. So please brace up for a good price. And 11th of January, at the Auto Expo, you will see the price unveiled. And we believe that Ioniq 5 will be really creating a new segment. Vehicle to load function is something very, very exciting. You have seen what it can do, at the Gateway of India launch as well.
Any headwinds to growth that you see this year, sir?
Like I mentioned, very difficult to put a number to it. Of course, now the base is high. As you know, 22 was the highest ever, volume. We had sales of 3.8 million. So we cannot expect that kind of, high double-digit growth. But like I said, there are many positive factors in 23 as well. So surely we are expecting some growth to happen. Now, what percentage? Very difficult to say. And I think we should, like I said earlier, if we want to end up at a higher number, we should take it month by month and quarter by quarter. And I'm sure all of us together as an auto industry should be able to maneuver the challenges and leverage the so many positives and end up at a better number.
All right, so interesting conversation coming in out there. The industry is definitely shifting towards SUV, and Hyundai has made the most of it with their launches. With that, we'll do a short break. On the other side, Manisha Gupta joins in with all things commodities. Saif Mukadam accompanies her.
Welcome back, and joining us on the show now is Saif Mukadam. He's research analyst at ICICI Securities. Saif, hi, good to have you. And what a day this is. The last 24 hours clearly have told you that while the risky assets have continued to decline, the gold and silver prices only continue to trade on a firmer note. Even in today's market, 1850 plus kind of levels in the global markets, and the rupee depreciation seems to be handling or rather supporting the Indian calculations as well. So I'll start with gold with you. And what's your sense outlook for this year now?
Yeah, hi. Thank you for inviting. Happy New Year to all viewers. We expect gold prices to rally till 62,000 this year. There are various factors will be supportive for the gold prices, but more focus will be on the Fed rate path, interest rate path. If we see from past few months, the inflation numbers are coming down in US. Secondly, if you see any data, key economic data like manufacturing data or housing data, it's feeling the heat of rate hike. So we see Fed to pause its interest rate hike early in this year and may even cut down rates by the end of the year. Even the dollar is losing its steam and yields are tumbling down, so that will be supportive for the gold prices. Demand for the safe haven will also be rising due to global economic slowdown and geopolitical tensions. So from here, we expect gold prices to rally till 62,000.
Saif, while gold has continued to gain, silver clearly outperforming, and silver also being an industrial metal has much more working in its favor. Are you also expecting newer highs for silver in this year?
Yeah, hi. Even yes, we are expecting silver prices to outperform gold, and we are expecting silver prices to go till 80,000. As we see, the market is expected to remain in deficit for a second consecutive year. We are seeing that demand for silver is being seen across the segment. Demand in the industrial segment is expected to rise due to electrification of vehicles, say 5G technology, or commitments to green infrastructure. Even the demand for the investment will kick in due to recessionary fears. So we expect silver prices to outperform gold and rally till 80,000.
All right. While of course we do understand that the cabinet is looking at green hydrogen as an approval there, and that's exactly what various countries are talking about now. Climate control and renewables, 5G, green infrastructure is something that is on cards right now. What is the impact of all of that you see on fossil fuels like crude and gas prices? What is your expectation, or where are we moving in prices for those?
Okay, on crude, we are expecting crude oil prices to go till 78.50 on MCX, and internationally, we are expecting it to go till $95 per barrel. That is because of the tighter oil market is expected in the future, and even the demand from China is expected to recover.
Okay.
The OPEC has already decided to cut down its oil production by 2 million barrels per day, and even Russian oil production is expected to go down. So this will be some positive factors for the crude oil to ready till $95 and on M6 till 78.50.
Well, that's about the energy space, but I also want to talk about the metals as a sector, Saif, because the previous year saw all-time highs, multi-year highs. Metals as a sector for equity markets also has been one of the best performers there. We've started this year on a very choppy note, dollar on one side and the expectation of Chinese demand on the other. What are the factors you're looking at and any topics that you have in metals therein?
Yeah, sure. Copper, we are expecting it to go till 850 again on MCX due to the supply concerns from Chile and Peru. Secondly, your weakness in dollar will be supportive. Stockpiles are depleting on LME registered warehouses. Secondly, China, if you see that China has already started loosening its COVID restrictions, so that will raise the hopes for economic recovery. And China has also taken some steps to revive its property sector. So this all factors will be pretty positive for the copper. Aluminium side, if you see aluminium prices, we are expecting it to go till 260. That is due to the soaring energy prices, the Europe has cut down its aluminium production. So that will be again supportive for the prices. Even the stocks are depleting in aluminium. Stocks are depleting at the LME registered warehouses. So that will be supportive. On lead and zinc, we are expecting lead to rise till 200 and zinc till 350 on MCX. That is majorly the market is expected to remain in deficit, and the LME registered warehouses, the inventories at LME registered warehouses are also depleting. So these are the major factors that will be supporting the base metal prices.
Saif, in all that you said, there are 2 or 3 things that the markets will watch, keep an eye on rather. One is the dollar index, the moves therein. The Chinese demand is the second thing. And the third clearly is about the interest rate hikes or the peaking of it that we may see ahead. What's your sense on what is going to be the more important factor to keep an eye on?
Major factor is like Fed will pause its rate hike. So it's most probably it's expected to peak at around 5%. So that is to be majorly focused on, and that will lead to the weakness in the dollar index, which has already started showing it's losing its steam. And so these are the major factors and the demand supply concerns which are going on, which is already mentioned for Chile and Peru for the base metals, for the copper. So, and depleting stockpiles again at LME registered warehouses. These are the major factors which will be impacting the base metals and even the crude oil prices.
Okay.
Okay, all right, Manisha, thanks very much for taking us through that important piece of news. But we did have another important piece of news which was flashing on your screens, where the cabinet has approved the National Hydrogen Mission. We're awaiting more details on it, but just to give you a larger, broader context of this particular news, the mission, remember, aims to aid the government in meeting its climate targets, making India a green hydrogen hub. Its aim is to meet a target of production of 5 million tons of green hydrogen by 2030 and related developments as well in the renewable energy sector. We take a break and get you more on this piece of news as well as other stocks. Stay tuned. Welcome back. Well, Prakash Diwan is with us to discuss the cabinet approving the National Hydrogen Mission. Prakash, hi, welcome to the show. If you could just put the news into context for us, which are the stocks which are likely to benefit the most?
So, I think this is more of a motherhood policy of sorts, which is likely to benefit the entire sector and will probably start helping most players pick and choose their areas of focus and specialization. And now we'll probably see a very rapid build-up on capital deployment after the clarity of the policy is through in terms of which elements need to be focused on. But the entire ecosystem, and you know that it's starting from virtually from scratch as many other economies have seen happen. So it's not that we are way behind or we need to kind of catch up with the trends. We are in fact setting the trend in mass scale, low cost production. So this is definitely going to be a very major. It's going to acquire a lot of clarity more than anything else at this point in time. And after this, maybe a few weeks later, you'll probably start seeing some announcements. The companies that benefit, of course, would probably be the two largest industrial groups in the country who have announced their plans to deploy a lot of capital behind this. And then the downstream businesses like making of electrolyzers and catalyzers, that you have so many other things, ammonia value chain. So there's a host of things which actually will benefit. But largely, I think it's going to be the starting, getting things to be off the starting blocks in terms of production capabilities coming through. So the first round is going to go to companies that do the construction and the engineering part of setting up hydrogen manufacturing units.
Okay, so would you approach this from the way that L&T, Siemens, ABB, the likes would probably be key beneficiaries in terms of order wins for that infrastructure?
Yes, that's exactly what I meant when I said the construction and the EPC and engineering businesses. They are the ones who will probably get the first port of call, maybe the first port of call to see things getting into the order book crystallizing for them. And that's precisely why you'll see capabilities getting tested for quite a few of these players who have been developing the capabilities but not yet put them on the ground. So L&T has done a lot of work, have piloted a few projects, but of course a much smaller scale. And now you'll probably see that scaling up of most of these projects will start getting announced.
Okay.
So there are very specialized players as well. So there's a small company based out of Goa called De Nora, which is part of the Italian multinational De Nora group, which is one of the four global giants who have capabilities to develop equipment for what goes into making hydrogen. So those kind of small companies, small businesses are the ones that probably will start coming into the reckoning.
Okay, all right, Prakash, we're going to leave it on that note, but an interesting list of stocks that you've mentioned which would probably benefit from the green hydrogen policy. We'll get you more details on it. It is basically to reach those climate targets that India has and production targets for green hydrogen by 2030 as well. So this policy should help facilitate that. On that note, it's a wrap on Halftime Report. Business Lunch will take all the action forward.